People, it's that time of year again, the moment when investors clutch their chairs and Tesla enthusiasts hold their breath to watch how many svelte state-of-the-art Teslas are introduced to the public this quarter. The difference is that it's not just about automobiles, rather. It's about how those cars may boost your portfolio and help you realize your financial goals more quickly. We're delving into the fascinating world of Tesla's Q3 deliveries and their heart-pounding impact on the constantly evolving stock market today as we dive deep into innovation and finance. We're going to take you on an exciting voyage through numbers and a hint of drama in the stock market, so fasten your seatbelts. But there's still more. Exclusive interviews with financial geniuses, market analysts, and Tesla insiders who will reveal all the details are scheduled. Will there be a cha-cha of obstacles or a tango of triumph during the stock dance? Will revenue numbers quietly park in the garage or explode through the roof? The analysis, the insights, and the rush of adrenaline are all here. However, before we go any further, please remember to hit the like and subscribe buttons. Introducing Tesla stock news, where we will be bringing you this video. Now that we have said it, let's go on. The first topic covered in the movie is Tesla's Shanghai factory, which has been in the news recently for its remarkable delivery total of over 64,000 cars in July. This spike may be related to ongoing renovations at the Shanghai plant. Let's now dissect it in detail. The deliveries and productions this quarter could prove to be quite the spectacle. As you are undoubtedly aware, I have a strong interest in Tesla and have followed the rise and fall of the company's shares. Let's talk about Tesla Shanghai, the superpower. They achieved an amazing 64,285 deliveries in July, but if there hadn't been any upgrades in effect, that figure might have increased much more, perhaps approaching 70,000. Don't worry, though, those upgrades are a part of the larger scheme that will support Tesla and its shareholders' long-term profits. As everyone knows, Tesla is all for long-term cars, and the new Highland is the place where Model 3 manufacturing has started, so the improvements are really noteworthy. Turning now to August, I believe that the renovations will be well underway. I will remain conservative and say it's 7 days, but they may decide to go longer. This might have an impact on the 2,500 cars that are currently produced every day. When we compute that for August, we're talking about a good 60,000 cars being made. September keeps up the momentum, producing a staggering 75,000 automobiles on a daily basis. Let's speed over to Fremont now. They parked 51,000 cars in July. After accounting for the Independence Day holiday, August production is estimated to be close to 41,000 automobiles, reducing 7 days owing to possible upgrades. September continues its consistent pattern, with slightly more than 49,000 cars arriving. The cumulative production for these 3 months comes to 141,000. Berlin is taking center stage right now. In July, 25,000 cars were produced at an 800 per day rate. I'm crossing my fingers for a weekly surge of 6,000 automobiles in August. Remember that by the time this video is released, this may have been verified. Snipped from August by 7 days, we're looking at about 20,000 cars. September keeps things consistent with 27,000 cars. Berlin has contributed an astounding 72,000 automobiles in all. Now let's change directions and go to Austin, where there is a noticeable buzz. Independence Day fell on July 1st with 750 vehicles produced each day, or approximately 22,500 vehicles overall. August is a very different story. With all factories undergoing modifications, I'm taking precautions and cutting 7 days off of August 31st. With just 24 days remaining, that comes to more than 19,000 cars. But September is when I think the real magic will happen. Austin's weekly production of 6,000 automobiles is my goal. That's about 25,000 automobiles plus 1 day off for Labor Day weekend. Please start the drum roll. Austin is the manufacturer of the most cars, having built almost 66,000 units. Really impressive, in my opinion. It's time to add up the figures for a major disclosure now. With July excluded, Shanghai produces over 415,000 cars total. Adding Shanghai, though, might bring that closer to 480,000. However, we'll set that aside for the time being while we wait for more precise numbers. After analyzing the data, we find that there were 393,918 automobiles delivered with a 95% delivery rate. Now that Shanghai's July deliveries are taken into account, we're easily surpassing 458,000. I realized that I mentioned 466,000 on Twitter, but we were a little off until we checked again. That's still impressive, though, especially with the enhancements taking center stage. Take a gander at those inventory charts to see how intense the demand is. It is anticipated that the average selling price will rise from $43,800 to $44,200. You might wonder why. In other words, while the supply is lagging behind, the demand is genuine. Although the Q2 statistics are unexpected, I'm giving nod credit at 250 and am optimistic about a turnaround. A higher average selling price together with a few other reasons are driving up service leasing and car gross profits. Let's now discuss auto revenue alone, that is, without credits or profits. Energy with an estimated $1.9 billion is also a topic of interest. And who knows, even if the percentage stays at 18%, in Q3, it might only increase to 19%. Operating expenses, taxes, interest, and other specifics remain in effect, totaling a constant $450 million. Imagine that millions of dollars are growing silently because Tesla is seizing the chance and not letting it pass them by. Credits the amount of shares in question is $450 million. Now for the juicy Q3 specifics. This is the prediction: there are 458,223 cars being delivered. That's quite a figure, huh? Examine the greater picture. Due to the upgrades temporarily affecting the leverage, the total vehicle revenue may be slightly lower than Q2. We anticipate that these improvements will soon ignite the engines in production, producing cars at breakneck speed. Looking behind the financial hood now, the revenue is skyrocketing to around $25.5 billion, and the gross margin for the quarter held consistent at 18.2%. Hold on, with a $2.9 billion deficit and a $3.3 billion non-GAAP. The net income is also no little accomplishment. A strong financials suggest a sound bottom line. When it comes to EPS, the non-GAAP number of $0.96 six good. Wall Street is speculating about the low 70s, but as more information becomes available, we may see that figure rise. This looks like it will do better than Q2. The overall EPS has slightly decreased, though, and this could have a weigh on the value of the stock. In relation to the stock price, it is presently trading at about $250 with a P of 71. Applying the same PE ratio to Q3 would result in a decline to about $241, which might draw in some astute investors searching for deals. There could be some market panic as the Q3 figures are announced. Tesla's market share may cause some people to worry, which could result in stock price declines. With a P of 60, the price might potentially fall to $220, and with a P of 55, it might even approach the bottom 200s. But hang on, things could get better if interest rate decreases and general optimism boost market sentiment. The stock might surge to a P of 80 or 90, perhaps even $300. Let's keep things grounded for now. It appears prudent to play it down the middle with a PE of 75. It's a prudent route to take, leading us to consider Q4. The real show may happen there. We're looking at a staggering 525,000 automobiles being delivered if Q3 upgrades take effect. Hey, don't be shocked if that figure starts to approach 540,000 or even 550,000. The idea is that Q4 might be revolutionary. Our target vehicle gross margin is 18.3%, which is in line with the strong Q1 results. Don't miss the spectacular conclusion, which includes an astounding $2.5 billion in total energy sales and $525 million in energy profits. I'm not sure what could be more stunning than that. Let's go on to Q4's major unveiling. Get ready, because this quarter may be really spectacular. The total revenue has nearly reached $30 billion, which is an outstanding start. Net income is expected to have a $3.7 billion gap and a $4.1 billion non-GAAP by year's end, making for an impressive finish. How about a triumphant conclusion? That EPS, too. It is about to cross the $1.109 non-GAAP threshold. Let's get real now. It would be a bullish move if the fiscal year EPS is expected to be approximately $3.40 zero. Imagine that the stock price is hovering at $340 and the PE ratio is in the range of 90 to 100. Let's now maintain our footing. A bet with a P of 80 appears reasonable. Let's now discuss the reasonable price ranges. We anticipate a possible stock price of between $270 and $330 per share as we say farewell to 2023. Regarding the year-to-date total of car deliveries, we are almost certain to surpass the 1.9 million milestone. But for now, let's exercise caution. A commendable 42% rise occurred in 2022 compared to 2023, even with the renovations and the changing economic conditions. And that concludes our discussion for today. Please consider giving this video a thumbs up and subscribing to Tesla Stock News in order to see more like it. We appreciate your time, and we'll see you in the next video.